All right, so I thought I found a new strategy last night on trading, and I was completely wrong. Okay, so I was reading the MACD in a whole different way than you're supposed to actually read it. I didn't understand what it meant. I mean, if I would have actually read what MACD stands for, I would have understood. So MACD stands for the moving average convergence divergence. Now, I'm paper trading, not using any real money, and I have no idea what I'm talking about. Okay, this is just a library of information that I'm uploading of things that I learn along the way. So let's go ahead and get into this. Okay, so let's go to our charts here. We're gonna scroll to the bottom. So this is a live chart example of a trade that I did today. This is what the market looked like today. So in this trade, I'm gonna show you an example of what I was doing last night. Now, last night I was profitable, but this is only gonna work in a choppy market. So if the market's having huge breakouts or huge fallouts, you're not making money. This is not a profitable strategy. If the highs and lows are very predictable and it's staying within a fairly tight pattern, then yes, the strategy works beautiful. But for today, with some pretty big breakouts, it's a terrible idea. So I decided to look into why I was losing money, and I had a whole wrong understanding of the MACD. So I'm going to show you here. So as the MACD, as these lines are coming up here, I would wait for them to get at the top, and then I would place a sell order expecting the chart to go back down, which it did. So as you see here, the chart relatively follows this line. The bar graph underneath it, or in between it, it relatively follows the bar graph. You have some peaks and you have some dips, but the peaks are usually about the same height and the dips are usually about the same height as well. And in my mind, I was like, okay, cool. So it's only gonna go up so high and it's only gonna go so low. So if I time it right, I can get in while it's high, place a sell order, and make money on the way down. And once it, starts rolling back over and going up, I'll place a buy order and make money that way. I was completely wrong. So in the title, in the name of the MACD, it's the moving, the moving average. So if you look here in this histogram, so you can see, the MACD, the bars are growing, and then the amber shows that it's shrinking. Now the teal is growing, the amber shrinking, and then you have your lines running through it, and that's your MACD line and your signal line. Basically, it's showing how strong the movement of the market is. It's not showing the price, it's not relative to the price whatsoever. It's showing how strong of a movement there is in the market. Let's look at this bearish divergence here. As you can see, you have two highs. You have your first high here and you have a higher high, right? Well, look at what the MACD is doing. You have your high, but then you can have a lower high. They're not correlated whatsoever. So whenever the MACD is dropping and the price is going up, that's going to show us that we have a weakening momentum. It's going to show us that, yes, the price is still going up, but the amount of movement in the market is not as strong, meaning there's a potential rollover coming soon. Right here, the move is running out of fuel. So let's look at this. Let's look at the steamroller, okay? This is what I was a victim to this morning. You have your higher highs, you drop down, you have your higher high. Once again, I placed my buy order. I placed my sell order right here. I saw the MACD start rolling over and going down. I placed my sell order right here expecting to make money. And what happened to me? I lost almost $1,000 this morning. The price and the MACD are not relative. If I would have held on and waited, the MACD rolled over. If I would have waited for a key indication that the price was rolling over as well, I could have placed a sell order at that point and then made some money. Let's look at this. So you have a lower low, and you have your lower low and your low. Once again, the MACD is not relative. Just because you have a low your MACD can start rolling up even though the price is still going down. But what that's gonna show you is the movement is getting weaker. Once again, the movement is getting weaker. So you can expect a price rollover as well. You can expect the price to roll up or roll down in your favor. So basically, this is dipping down. The MACD is showing that you're running out of momentum. Once the price comes back up and breaks this high right here, you know that you have a pretty good chance at taking a buy offer and making some money. The MACD is showing that the movement's running out of steam, and it cannot go lower anymore or much more. It's not going to go much lower. So once that price starts coming back up and you see the MACD start to become positive, once that price breaks your high and makes a new high, you have a pretty good chance, if the MACD is rolling up as well in your favor, that you're going to be profitable. Once again, let's look at our live chart here. So as you can see, we had a huge roll up this morning. I was watching the MACD. Look, this MACD, it follows the chart precisely. And then what happens? The market continues to go up and up and up, and the MACD tanks. It goes all the way to the ground. And I lost money. I didn't understand why. But it's because the MACD shows that the movement was running out of steam. So the market began to climb, not very fast, not a very exaggerated climb, but it still climbed, but it started to flatten out here towards the top. And that's exactly represented by the MACD. The MACD is showing the decline in the movement, and it's flattening out. Once it starts flattening out, we had a little peak here, and then what happens? It's flat, and then the MACD drops. It rolls over, and we have a pretty significant low here. This would have been a great time to buy. If the MACD is rolling over, and at this time, I'm seeing a key indicator that the price is also going to roll over, that's a great that's a great point to buy. Now, if you look here, the MACD dips where the price went down, and then it comes back up. It flattens out again. It flattens out again here at the top, and what does the MACD do? It drops all the way back down. So be careful how you're treating the MACD. It is for movement only, and it should be used to determine whether a very strong bullish or bearish movement is running out of steam. If it's running out of steam, it's going to be, it's a matter of time before the trend moves in the opposite direction. So watch the chart, use the MACD as a tool, not a certain indicator to buy or sell. The most profitable way to treat the MACD and to use it to your advantage is to watch the market run out of steam. Watch the MACD run out of steam. Watch it go down. Watch it roll over in a really high, or watch it come up in a really low. You're gonna run out of steam. The market is going to roll over. Wait for that rollover. Look at this example right here. Wait for that rollover. It's going up, it's breaking, it has a high, the MACD starts coming up, we're running out of steam. Wait for this line to break the high. The market goes down, it comes back up, break the high, then buy. Right here, we're coming down, the MACD starts coming up, we're running out of steam. The low is running out of steam. Once this high, as it comes back up, once it's breaking here at the bottom or breaking here at your high, place your buy. Look how much you would have made. Right here, the MACD starts running out of steam. Right here, MACD starts running out of steam. The price starts dropping. We start coming up, the MACD starts coming up. We break here, we place our buy. We're going up, we're making money. Look over here, we run flat, the MACD starts dropping. There's a key indicator right here that the price is going to go down. Look at the MACD. It crosses over the chart and goes down. Place your sell. Place your sell right here and make money on the way down. Wait for the price to break the low or break the high. If you're on the buy, wait for the price to break the high right here. If you're on the low, wait for the price to break the low. Once it breaks the low here, enter. Once it breaks the high, enter. Use the MACD as a tool to show you if the market is running out of steam or not.